And I'd like to welcome everyone logging on to Money Metals and Mining Virtual Expo. We do have about 3 minutes before the next session begins, so sit back. We'll be right back with you. Thank you so much for being here today. All right, Sean, we are 1 minute out. Coming up, I will lead us off with a quick intro, and then you'll be all set to go. And a great day to all of those joining us in the virtual platform for Money Metals and Mining. We are pleased to welcome Sean Campbell, who serves as Chief Financial Officer of Dakota Gold, bringing over 15 years of progressively senior experience in project and operations financial management obtained through professional practice, capital markets, and industry experience. He is a chartered professional accountant and a CFA charter holder. Sean, thank you so much for taking the time out today. It's all yours.
Okay, well, and thank you to the Money Show for hosting the event. Thank you to any investors or prospective investors for signing on for the webcast. Uh, I'm very excited today to be presenting to you Dakota Gold, a company which is building the next mine in the Homestake district of South Dakota. I will be making forward-looking statements during the presentation. You can see on the screen our disclaimer. This is available both in our presentation as well as our website, and I'd just like to draw your attention to that. Dakota Gold operates in South Dakota in the US, and it's a unique opportunity to get exposure to gold in that we are a US company with a US head office with exclusively US exposure to gold. So you're taking out all the geopolitical risk associated with owning something outside of the US. We have 48,000 mineral acres in the Homestake district. And if you look at the map in the center of the screen here, you can see that's where the Homestake mine existed, and that produced 40 million ounces. So that's over $120 billion worth at today's prices of gold. And it was considered the richest few square miles for gold in the US. So we have the land immediately adjacent and to the north of the Homestake mine, and that's where we have our Maitland property. We've made two discoveries over the last 2 to 3 years. on that property, one we call the JB Gold Zone, and that's 11 grams over 4 meters with 47 intercepts. And we'll have more on these with more details later on, as well as the Unionville Zone, which is a never before looked at style of mineralization that's near surface with 4 grams over 6 meters as our average intercept. But the primary focus of today's call is going to be the near-term cash flow opportunity by building the next gold mine in this district, and that's the Richmond Hill Gold Project. So Richmond Hill is a simple to execute low capex opportunity for gold production before the end of the decade. This last year transformed the company. In February, we put out a resource, and that resource contained 3.6 million ounces of measured and indicated gold and 2.6 million ounces of inferred. In addition, it had 38 million ounces of silver in M&I, measured and indicated status, and 23 million ounces of inferred. So that was a very large global resource. We then took from February till July to put together an initial assessment with cash flow. That initial assessment was published in July and had some very robust numbers coming out along with it. So we use a very conservative gold price when we did that study, especially considering where spot gold is today. So our study at $2,350 had between 1.6 and $2.1 billion net present value. At spot prices, that goes to over $3 billion. The after-tax IRR, over 50% with that low gold price, again, over 100% at spot gold prices. And I'll go through more of the key metrics in the next slide. Just to maybe make one last comment on the map here that you see before I move forward. This is a very prolific district. When you consider the Homestake mine produced over 40 million ounces, the Wharf mine over 4 million in past production and a current reserve and resource of over 2, and then you add in Richmond Hill, that's close to 60 million ounces of gold, all within about 4 or 5 miles of each other. So I'll focus on the simple open pit heap leach project of Richmond Hill. This was the study that we published in July using the low gold prices of $2,350 an ounce gold and $29 an ounce silver. Spot for both of those metals is considerably higher today. These mine plans lasted between 17 and 28 years, depending on what material gets included, with a head grade of just over 0.5 gram per ton. Based on that and a simple heap leach processing method, we're looking at an average of about 153,000 ounces a year in that measured and indicated plan. With low operating cost of less than $1,100 an ounce, that gave us around $1,200 an ounce margin at the study prices. But at current spot prices, we're looking at $2,500 an ounce margin, and that's generating considerable cash flow that ultimately could be returned to our shareholders once we're in production. The initial capex is below 400 million, and that was important for us because as a developer, our market cap right now exceeds that initial capital. So we believe there is a path forward for us as a standalone company to study and ultimately build this mine. Here you can see the production profile over the measured and indicated life of mine. And you can see that initially the production is well above 150,000 ounces a year. And that over the life of mine, we produce over 2.6 million ounces of gold. And again, with that cost of only $1,047 an ounce, that gave us over $1,200 margin at our study price, but over $2,500 at current spot prices. When we move forward with this mine, you can see a blue outline on the map here. That blue outline is our private property. We believe that by advancing this project and maintaining the project exclusively on our private land, we have the ability to primarily permit with the state and county. That allows us much greater certainty and access to regulators than if we stepped over onto the federal side of that line. I would say that we do have Forest Service land adjacent and to the north, adjacent and to the south. And so if we didn't have this opportunity to maintain our project within the private land, we could step out and consider infrastructure on Forest Service land, but that entails federal permitting. So while it looks like it's constrained, our goal was to plan a mine within that private land that took up as much of the space as possible. Because when you look at the overall resource, you see that almost the entire property is mineralized. And so, again, we intend on looking at a mine plan that uses as much of that private land as possible and goes right to the edges in order for us to maximize the net present value of this project. Because we're working through the state permitting in South Dakota, we believe the initial permit will allow a disturbance of 580 net acres. So the way the permitting works in South Dakota is where you disturb an acre, it counts against that 580. But later, if you backfill or reclaim that area, you can have a further disturbance. And so you'll see in these slides how we backfill as we move along the mine plan and include that concurrent reclamation. We believe that we'll start mining in the northeast section, where you can see here we've highlighted the mined area. We have a small overburden storage area only during the early phases of the mine life. Because the project has a very low strip ratio in both measured and indicated, as well as the measured, indicated, and inferred plan, once we go past the first 5 to 7 years of mining with backfill, we no longer need that area and we're able to reclaim that early on in the mine life. All of the plant facilities are here in the middle of the screen with a Merrill-Crowe processing plant, a simple 3-stage crush, and then the material will be placed on a heap leach pad where it will be irrigated in order to recover the gold. Here you can see a heap leach pad that will last around 2 years and is considered phase 1 of leach pad 1. Here you can see how the leach pads, pits, and reclamation progress as we move through the mine life. Here's phases 3 through 5, which in the measured and indicated plan take us through to years about 10 or 12. Here you can see those leach pads are built up with close to 150 million tons of material on them, but you can already see while we're still mining, we believe concurrent reclamation is important. So in this slide, you can see how the overburden storage area to the north has already been reclaimed. And in the middle, you can see where early phases of the mine pit are also reclaimed. And here at the end of the mine life, we want to be able to share with the community as well as the regulators that we have a robust reclamation plan that puts back all the rocks into the approved topography, revegetates, and ensures that we leave a legacy here from mining that we're proud of. There is a lot of work that goes into studying how you can build a successful mine. One of the key aspects for us will be on the metallurgy. We're very fortunate that in the top half of the deposit, the rocks are very similar to the Wharf mine that operates less than 2 kilometers away. So Wharf has been operating for 40 years, and 80% of our material in the first decade of operating will be the exact same as what they're processing. So we envision, similar to Wharf, crushing the rock in 3 different phases until it's just below ½ an inch. That will allow us to unlock more than 80% of the gold that's within those rocks. In order for us to finalize the work that goes into a feasibility study to construct the mine, we look at a timeline where we're updating the geometallurgical domains this next quarter. By the end of the year, sending off shipments. And then throughout 2026, we'll see results that we can share with investors about our progress on the metallurgical work. I would also point out that in the southern half of our deposit, where you have a different style of mineralization, we're fortunate in that there was a historical mine there that produced 170,000 ounces of gold. We have access and we are using all of the data that went into building that mine, which includes just a tremendous amount of metallurgical work. And so when you combine the mineralization in the top half of the deposit being similar to Wharf and the feasibility level work in the southern half, while we are at the initial assessment stage, we feel like we have considerably more data to support our assumptions than others might have at this time of study. Here you can see a model of the geological outline of the deposit. This year, we're excited about having 3 drills currently at site with a target of drilling 5,000 meters this year. Because we have such a large, robust deposit, the focus of the drilling this year is infill, expansion, and collecting metallurgical samples. The one area that we do anticipate having expansion drilling is underneath the A prime in the northeast corner of the deposit. That's where you can see higher grades based on the colors, as well as those higher grades going right to the extent of drilling. We are hoping that with further drilling, we can expand that to the north, as well as some infill, as this could be a higher margin area that contributes early in the mine plan. Here's a close-up image of what I was just speaking to in terms of the northeast corner and where our infill and expansion drilling is going to be. So you can see how in the middle of that map, there is no resource. That was because we didn't drill that last year. With those planned holes, we are hopeful that we'll be able to fill in that mineralization, and material that was waste in that initial assessment goes into resource, as well as the expansion to the north. You can see here on the property line, we intend on maintaining all of our drilling and mine planning within that private land package. You can see based on the colors here, the grades are well above that average resource grade, and with intercepts like 50 meters of 2.22 grams per ton, you can see the potential that goes beyond that half-gram average in the mine plan as we do further infill drilling in this area. We will be releasing results from the infill drilling and expansion drilling in this area as we go throughout this year. While we are excited about our simple heap leach opportunity, we did want to point out that our resource had over 900 historic holes that were mainly focused on the oxide. We have drilled 147 holes that contributed to this resource, and what we started to outline was a considerable sulfide resource below that oxide cap. While our current feasibility study will be focused on the oxide cap, we did want to remind investors that in addition to that oxide or heap leachable resource, there is a considerable sulfide opportunity at depth, which gives you the what's next. Because of the prolific and highly mineralized nature of the rocks in this district, we believe that further to our initial opportunity, there is more to come. And so I've talked about the project, the robust economics, and our current feasibility study work. If we look at the timeline here, I mentioned already that in February, we published a resource. In July, we came out with our initial assessment with cash flow that outlined those robust economics, and then immediately started work on our feasibility study. The critical path for us is the feasibility study and baseline data collection that is part of our permitting. We intend on filing a notice of intent in late 2026, which kicks off the permitting process, where it's primarily with the county and a conditional use permit, as well as a state large-scale mine permit. One of the benefits of being state permitted is that we have the opportunity to have sign-off and agreement on what will be part of that permit early on. So as an example, we laid out a map of our potential project, and we put on that map where we believed the best spots to do water monitoring would be. And we came up with 22 locations. We then were able to sit down with the state and moved a couple of those wells, as well as added a 23rd, and now we're drilling those. So when we get to submitting that permit, both sides already know there's going to be 23 water wells. We know what the diameter, we know what the data is going to be. We know what the duration of the collection is going to be. So there's no surprises, and both sides know what to expect when you get to submitting that permit. And it's important to note that in the state of South Dakota, there's never been a complete large-scale mine permit submitted that wasn't ultimately approved. As we go through permitting, we can start early engineering and engage an EPCM contractor. Because this timeline for a mine is so compact, with production before the end of the decade, one thing that was important to us, even on that initial study, was building a strong team that had the ability to deliver an initial assessment of cash flow, then a feasibility study, and then all the way into production. So we engaged partners like M3 as the overall study manager, knowing they had the capacity to do the EPCM work. So we are set up with a strong team to execute not just on the feasibility study, but all the way through construction and into production. Previously, I had mentioned the capital number, and we are very happy with our partner, Orion Mine Financing. They are a 9% shareholder, and they came in early days with conviction and provided us with a non-binding $300 million letter for financing for the future construction and development of assets, further demonstrating that even though we are a junior development company, we have the ability to take this project through construction and into production. So I've talked a lot about the Richmond Hill Gold Project and how we're excited to be building the next gold mine in the Homestake District. But in this environment and with our land package, there are several other opportunities that are upside to that robust project that I've outlined. One of them was the sulfide project, where you could see the 500 million ton oxide resource, below that a much larger sulfide opportunity. Here we have the land that, as I pointed out, the JB Gold Zone that is adjacent to that monster, the past producing 40 million ounce gold mine, the Homestake mine. So you can see on the bottom, the blue line is the property boundary and how we have the land immediately to the north and adjacent. And those same rocks, the Homestake formation, goes from the Homestake mine and onto our property. So in the Homestake mine days, they had actually put a drift underground on it to our property and made a discovery called the North Drift Discovery, mineralized intercepts on our property. We are looking for the up dip, so along that same formation, but closer to surface, and that's where we discovered the JB Gold Zone, 47 intercepts of 11 grams per ton. It looks very similar to the West Ledge system in the old mine, which produced 6 million ounces of gold. And you can see the average grades and widths are quite similar. We believe being a responsible operator is what gives us our social license and will allow us to go through the rigorous permitting opportunity that's there. I would also say that to date, we have invested over $100 million in the state of South Dakota to advance the project to where it is today. And should we progress all the way through construction, that 100 million will grow to 150, will grow to close to $600 million that we will invest prior to having our first revenue. We're very proud of the fact that we're working with the community in a way that is welcoming that investment. Here's a slide on our share capital table. We're very happy with our existing shareholder base with some very blue chip funds, strong management ownership, and only 112 million shares outstanding. We have $41 million in cash as of June 30th, and some warrants priced at 208, and that's 6.7 million of them. Those expire in Q1 of next year. So assuming those investors choose to exercise, which those options are, those warrants are quite in the money, that would bring in another 14 million. That means with the cash in the bank and that warrant money, we would have sufficient cash to fund this year and next year's program all the way through feasibility study. So what excites me is that we do have a very attractive project with a significant net present value. And that net present value, since our next financing could be tied to construction, means that that net present value is over shares outstanding that may not change because we won't need to, like many pre-revenue stage companies, have dilutive financings to get there. We have strong analyst coverage with 3 large institutions covering us. And then finally, our shareholder returns year to date have been in excess of 100%, well outperforming spot gold, the GDXJ, and the S&P 500. This is a slide that one of our analyst coverage put out, and this compares for you as an investor the different opportunities for simple heap leach projects in the States. And here you can see that the Richmond Hill project has the largest resource, the highest net present value, and the best IRR. In terms of where we're headed over the next 3-4 years, with being able to publish a feasibility and then ultimately construction and production, from a valuation perspective, you can see on the left-hand side, Dakota Gold is currently trading at $45 an ounce. As we de-risk this project through feasibility study, construction, production, we see that opportunity to re-rate and get valuations more similar to other companies that have been able to achieve that, which is in the $3 to $3.50 an ounce range. We have a strong board and a strong management team. One of the benefits of operating in South Dakota is that with 125 years of mining with the Homestake mine, there's a lot of local expertise. So we have several directors, as well as a significant part of our management team, which was born, raised, and worked in the area, and is able to bring that local expertise to bear as we advance this project through the permitting and into construction. So while this year has already been very exciting for the company, I'm still looking forward to being able to release additional drilling results as they're received throughout the rest of this year. Then when we look on the metallurgy side, we should have some initial column test work that show modern day test results to support the assumptions that were made in that economic study. We're continuing to collect environmental data, and then we're building our team and should be able to outline that path through feasibility as we progress this year. So with that completes the presentation. Thank you for your watching the presentation, and I believe we may have some time for questions if there are any.
All right, Sean, thank you. Excellent presentation today. And a big thank you for all of those who logged on and are in attendance. Sean, we had actually one of your shareholders here on. They said they recently bought shares after the last Money Show presentation a few months ago. They're wondering, they're thinking about buying warrants expiring March 15. They're just wondering what's the risk and rewards?
Yeah, so we have listed the warrants, so they trade on the NYSE as well under the ticker symbol DC.WS. In terms of, I think that maybe I can speak in terms of the warrants and the relative trade-offs compared to owning the stock. As you mentioned, you're an existing shareholder, and we're very fortunate in that our shares now trade an average of over 800,000 shares a day and have a tremendous amount of liquidity. And so that gives an opportunity for an investor to both buy and sell at a price that is always very close to each other. The warrants, because of the limited number outstanding, tend to have much more limited liquidity. They are also, in general, considered riskier investments, which is something the investor should consider. So I think in terms of the specifics of looking at whether you should invest in one or the other, if you want gold exposure, you should probably consult your broker on that and look at your own profile, just because I can't really speak to you as an investor and what that risk profile should be. But those are maybe some of the differences that there is a more risk on the warrants just because of the lower liquidity compared to actually going and buying the shares themselves.
All right. Thank you so much. Thank you for that question as well, Eddie. And we had another question come in. They were wondering again, when do you expect to get the Richmond Hill permits?
Yeah, so if we looked at that timeline, we expect to publish our feasibility in early 2027. And then following around 12 months after that, we would get our permits towards the end of 2028.
All right. Thank you very much. We had another question that came in. They're wondering how will the cash flow generated from the Richmond Hill project be used to fund future exploration and development in the Homestake district?
That to me is a really exciting question because as I walked through in the presentation, I spoke about the sulfide at depth opportunity, the Unionville zone opportunity, as well as the Maitland opportunity in the JB Gold Zone. So I think that once we are a cash flowing entity, then we have the opportunity to study all three of those. For the Maitland opportunity, that may involve a decline to get to that Unionville zone in order to further drill test it and get the kind of drill density you need to really study the economic viability of that area. With the sulfide, that's at depth drilling. So again, you could have further drilling in some of the higher grade areas of the sulfide and then start studying that from a metallurgical standpoint in order to determine its economic viability. So with 48,000 acres in this Homestake district, which is a very prolific district for mineralization, I think those are our top three opportunities. But I can tell you that beyond that, there we have all the historical records from the Homestake operating for 125 years. And so beyond those three, there are still several other very good opportunities for us to advance once we have that cash flow in hand.
All right, excellent. Thank you very much. Looks like we may have time for one more here, Sean. Viewer writes, based on the initial assessment, what are your key economic takeaways that investors should focus on for the Richmond Hill Oxide Heap Gold Project?
Yeah, so I think that there's a few things that really should be focused on. One is the low initial capex. So you saw in the one slide that the capital intensity of this project is incredibly low, that it's well under our current market cap, and that we already have financial support. So in terms of a company of our size being able to advance it, that's key. It has a robust long mine life. It's got a very low strip ratio, a very high margin. And on some of the other financial metrics that you look at in terms of whether or not an asset has the opportunity to be advanced, I think that the Richmond Hill Gold Project shows exceptionally well. So I would say those are some of the highlights. But again, very excited to take that initial assessment and now working on the feasibility study to advance it.
All right. Well, everyone, we're speaking here with Sean Campbell, CFO, Dakota Gold Corp. You're watching Money, Metals, and Mining Virtual Expo. Sean, thank you so much for taking the time out. Let's do it again soon.
Thank you.
Thanks. And a big thank you to all of those in attendance. Stick around. We have more great content coming your way. We have another full day tomorrow. So we hope to see you back here very soon. We'll be right back. All right, Sean, thank you so much again. We greatly appreciate it.